actually is strong customer authentication. This is a new piece of regulation which aims to protect consumers from rising payment fraud rates. If you use a European bank or fintech banking service provider, you've probably received an influx of emails and notifications recently from them informing you of changes to their authentication processes. This is the result of the new Strong Customer Authentication, or SCA, requirements. SCA is part of the EU's PSD2 regulation and has been written into law by all EU countries. This law says that 2 independent authentication elements must be used to verify certain types of payments, including those made online and with contactless cards. So what is an authentication element? Well, in order to successfully process a payment, under the new rules, businesses must ask customers for any 2 of the following. A knowledge element, which is something only the user knows, for example, a password. A possession element, which is something only the user possesses, for example, their smartphone. And an inherence element, which is something the user is, for example, biometrics like a fingerprint recognition. Transactions that don't meet these new authentication requirements or qualify for any exemption may be declined from the 14th of September 2019 onwards. Or at least, that was the plan. However, the industry has struggled to get its act together to the point where the European Banking Authority, the EBA, has allowed an extension for firms to implement SCA. Off the back of that extension, the UK's regulator, the Financial Conduct Authority, or FCA, has given firms until March 2021 before this new means of authenticating payments becomes universal, and after which the FCA can take action against the non-compliant. But some providers have already begun changing their authentication processes, which is causing confusion among customers as to which provider is asking for what and why when they're making payments. So let's try and unpick what these will look like when they occur before that mass rollout in 2021. For contactless payments, users will have to enter their PIN to authenticate the payment once certain criteria have been met. For example, some payment service providers, or PSPs, have decided to require re-authentication after a set number of transactions. Others have decided instead they will make the user take action after a certain value threshold of transactions has been met. And a third group will work on the basis of whichever limit is reached first. This leaves the consumer largely in the dark about when they're going to run into SCA or why they have to enter a PIN for a contactless payment. The first time most customers will know about the implementation of SCA is when their card is declined for seemingly no reason. It's worth pointing out at this stage that Apple and Google Pay are exempt from the requirements in most cases because they require the use of biometric authentication or a screen lock in order to activate them in the first place. When it comes to online payments, things are equally murky for many shoppers. The same rules apply regarding authentication. Card issuers are responsible for ensuring regulations are followed, but they have to be embedded in the merchant's payment flow. 3D Secure is widely used to authenticate online purchases. You will often have seen it when trying to check out on a new e-commerce site that you've not used before. However, pre-SCA, this was only the case when the purchase was judged by the issuer to pose a high risk. Now, as SCA rolls out in full, the use of an advanced version of 3D Secure will become the norm rather than the exception. 3D Secure is where you get a pop-up on a merchant's website after you enter your card details, and you have to enter a PIN, password, or code to complete the purchase. You either receive this code via SMS, or you have to generate one within your mobile app. As the new version of 3D Secure has been rolled out, the method used to complete payment has evolved. Increasingly, rather than entering a password to approve a transaction, you may now receive a notification requesting you use biometrics on your phone. Issuers typically offer a selection of these methods. Most have also included an alternative for those who don't wish to hand over their mobile number, don't have a smartphone, or have a disability which prevents them from reading a code. One such alternative is to automate a call to your landline, which delivers a code via automated voice that you then enter into the website. What has not yet been widely addressed is how to enable customers who cannot enter a code into a website, for example due to restricted mobility, to authenticate themselves. Some banks and banking apps are also having to change the way their customers log in to online accounts or banking apps. Typically, you can make payments to companies and other people from within your online account or banking app without additional authentication if you have sent them money before. The problem is that many providers don't require multiple factors of authentication to log in, meaning these payments are not SCA compliant. For example, if your bank only asks for your username and a password or memorable data, those are each the same type of factor, something you know. So what is the best approach? The best approach will depend on each customer's individual preferences and spending habits. Yet most PSPs are not in a position to tailor SCA requirements on a customer-by-customer basis. But a few of the first providers to start rolling this out made initial missteps in offering only smartphone-based authentication methods. This included Santander, Monzo, and Starling. These banks, and many others that have limited their authentication options to mobile, will need to provide additional options before enforcement starts in 2021. If they don't, they will end up preventing sections of their customers from making online purchases. So what are the pitfalls? What's certain is that the variation in the circumstances under which customers are asked to re-authenticate is sure to result in customer confusion. That's especially true given that most European consumers are multi-banked. Their remembering different requirements for different payment methods is unlikely to ever happen. The fear is that the combination of having to provide additional authentication almost every time you make an online purchase, alongside getting used to new methods of proving identity, will lead to frustrated shoppers giving up on making the purchase at all, damaging the merchant's sales. This is yet to happen, but it's one of the main reasons the EBA has delayed enforcing the SCA rules. What has actually happened, and what happens next? Overall, the introduction of SCA has been surrounded by confusion and misinformation. What we have seen is a number of creative and very different interpretations of SCA from across the finance and payments industry, as we have just discussed. There had also been widespread fears, which have not yet proven to be true, that SCA would cause significant damage to the e-commerce industry. That said, SCA is far from fully rolled out, so we could still see this happen. What's clear is that whatever issuers have decided, changing authentication procedures are starting to introduce friction to the user journeys and cause confusion. Providers need to follow some simple steps to ensure any changes they implement minimize disruption. They need to ensure a diversity of authentication methods that meet a multitude of needs, situations, and don't assume everyone has a smartphone. They need to communicate with customers using their preferred channels and use language that is as simple as possible. They need to include a wide range of communication methods, including in-app notifications. And they need to conduct merchant outreach so that sales staff know what is going on and, if possible, offer in-store signage. And that is Strong Customer Authentication Explained.